Welcome to the Imperium Forex daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. To open today's webinar, yesterday the RBA left the cash rate steady at a record low of 1.5% during the September's meeting. It is the 13th consecutive month that rates have been on hold. In a statement by the RBA, Governor Lowy did, however, point to low wage growth and high household debt as causes for concern, claiming that they will likely constrain future spending growth. Looking ahead today, we have the release of the Australian GDP. And then following that, on Thursday, we have retail sales and also the trade balance. Today's forecast for the GDP is at 0.8%. And if the market does come in slightly upbeat, it could be slightly positive for the Australian dollar. But the question is now whether it can break through the resistance of 180.30 or 65. If we see a break there, then I would rather sit back and see how the market plays out. My concerns at the moment is the fact that the US dollar is still weak and therefore could see further retests to the top side after printing a high of 28 overnight. Overall, I'm a little bit skeptical with the technical implications as they are not in terms of a supportive bullish case. Therefore, we could see this level fall once again around the 80.30.65 like we saw back in July and see the market tumble back towards the support at 79.45 and reassess from there. The US dollar fell overnight after the US Federal Reserve Governor Lael Brainard said that the US central bank should be cautious about rising interest rates amid the economy's persistent failure to reach its 2% inflation target. Markets at the moment are pricing around a 40% rate chance that the Feds will bring their last promise of the third rate cut this year, but it does look unlikely while the market remains at a low percentage. With the euro clinging towards that 119 handle, the biggest question is what the US dollar is doing. And at the moment, it's currently trading around 92.30. Now, a break beneath 91.70 would give further scope for the other markets. Starting with the euro, of course, being weighted at 57.6, is the fact we could see a re-challenge back towards that 119.70.75. Now, I'm a little bit cautious about this move after Friday's rejection from there. Could suggest that we may have a European Central Bank sitting up a topside range around that 119.70.75 with minor resistance seen at 40. I am still holding a view is to sell into strength, and if we do get a break beneath 118.65, then I am negative towards 117.90 to 95. I am still hoping that we could see a rebound in the US dollar, so therefore this would support my case. And especially when you look at dollar yen, as it's now back towards that 108.30.35 crucial level. If we see a break beneath there, that would give further concerns that the market may fall lower. Now, overnight, the yen has endured firm momentum as the ongoing geopolitical tension heightens to the North Korean crisis. The market has viewed yen as a safe haven asset since unwelcoming moves by the North Korea, with the recent exploded hydrogen bombs still to be claimed though by Western analysts. It is clear that this nuclear device test has ratcheted tensions between North Korea and the US, Japan and South Korea. The International Atomic Energy Authorities responded by labelling North Korea as a global threat, and US President Trump announced on Tuesday that he would increase weapon sales to Japan and South Korea. If the current crisis increases, then it would be questionable to whether the 108.30 level will hold. Although we did see a very strong rejection from there, I still play the view that the market may, but the technicals are still concerning to a bearish case. Keeping stops tight, a move underneath 108.30 would expose 106.75. But if we get another rejection, then that would give hope that the market will rally back towards 109.10, maybe to 109.60. Well, the pound has found a little bit of momentum overnight as the US dollar weakens, with the resistance holding at the moment 130.30 to 50. I am still viewing the market will sell off back towards 129.75. Still, we've got the Brexit risks holding at the moment, which doesn't give any favourable support for the pound. And I still would look to sell into strength. But as I mentioned, if the dollar index does fall beneath 91.70, then this could see the euro push on to 120, the pound go up towards 131, figure 60, Aussie up towards 81 to 81.5. So it's a big point about where the dollar index goes in the next 24 to 48 hours. An interesting price action overnight for gold as it stages a modest pullback before initial demand returned. The support comes in at 1,326. Now, gold stability has increased since the reaction to the unwelcome news, should I say, of North Korea's hydrogen bomb test. There is a couple of things coming out here. One thing is the fact that there is big concerns now that a radiation leak at the site of North Korea's massive bomb test. A Chinese nuclear weapons expert warned after authorities in China reported that the mountain where the explosion took place had collapsed. China's Earthquake Network Center said a second 4.6 magnitude earthquake tremor happened 8 minutes after Sunday's initial explosion, which measured 6.3. Authorities in China said the tremor could be a result of a cave-in. A potential devastating collapse of the mountain at where the North Korean is testing its weapons underground could see potential radiation leaks. So we need to keep a close watch on the press. Now, a break at the moment is above what we're seeing at 40 at the moment in terms of the bullish case. I'm sitting on the sideline at present, and I expect to see the market could rally up towards 60. Now, I'm very skeptical about this move, though, because the fact is the technicals are overbought. Now, the uptrend comes in around 1,311. Therefore, we could see any pullbacks still be a bullish case. The range on the day looks around 33 to 42. The old outlook, well, as I was explaining earlier in the week, I was looking for a bull move, and as you can see, prices raced higher overnight as it breaks this downtrend. With the target now seen towards $50 a barrel, any pullback should find support of 47, 40, 60. And to finish off on silver, well, I'm still very skeptical of this price action at the moment. You can see here the dojis are coming through as the market approaches this figure 10 on 118. I'm not overly bullish, and I do expect to see that the market may reject this level purely for the fact is that we are overbought, very much like gold. On the day though, uptrend comes in around 45, so it is a bit wide on the range, but nevertheless I see a range of 17.45 to 18 figure 10 in the next 24 to 48 hours, with the caution of being long that we could see a rejection, so do take that in mind. So that wraps up my daily video. Thank you very much for joining me, and I hope you have a wonderful day that's ahead of us.